What's up, investors? It's the Russian dude. In today's short video, let's talk about top 5 things what the Wall Street is afraid of the most that potentially can happen on the stock market, bringing it down. And so far, according to the survey by the Bank of America, approximately 36% of respondents, they said that the inflation is their major concern. Yes, at this very moment we do see that the Federal Reserve is kinda handling the situation with the inflation. It is slowly budging, but budging nevertheless. I mean, yes, it might have gone down faster, but well, it is still kinda going down, so maybe it is not that much of a problem, at least in the near future. We can see, because it is also expected that in September the Federal Reserve will start to reduce the interest rates, so it will be a very key pivotal moment. In the very near future we might see whether the inflation starts to go up once again or it will continue to be approximately where it is right now. The risk number 2 is the banking crisis, which can potentially lead to a global recession. Approximately 22% of respondents, they said that this is their major concern. And basically what it means, if you remember a couple of years ago, a number of American pretty big banks, such as SVB, Signature, First Republic banks, they collapsed like literally it felt like within a couple of weeks. So this was a major problem, but the swift actions by the Federal Reserve and the US government made this crisis to not unfold. They pretty much brushed it under the rug, they pretty much extinguished the potential fire in the very beginning when the match was just struck. At this very moment, I don't see personally any problems with either major American banks, so I don't personally think that this is also a major risk for the US economy in the near future. And also speaking about the global recession, I honestly don't think this is a concern as well, at least for now, because the European central banks, the other world central banks, the majority of them, they already started their pivotal moment and they are handling situation relatively good, once again, at least so far. The risk number 3 is the worsening geopolitics. Obviously, the number one conflict happening right now is in between Russia and Ukraine, then there is a conflict between Israel and Palestine, constantly unstable Middle East, China, Taiwan, you name it. Those things are extremely unpredictable. 17% of respondents consider this third factor as their major risk. And this one is extremely hard once again to estimate, because yes, those things they happen unexpected. Nobody expected Putin to invade Ukraine, yet he did it. Nobody expects China to invade Taiwan, at least not right now, but well, who knows. For this reason it is extremely hard to predict what can happen in the near future. Only those people who take these decisions, it is only inside their heads what can happen. The risk number 4 is the default situation or a bankruptcy of a major corporation, such as, for example, also several years ago, such company was Evergrande in China, which almost led to a total disaster in the real estate sector of the Chinese economy. Somehow, Chinese government was able to manage the situation, prevent things from collapsing like a domino effect, so as you can see still, 13% of respondents consider this to be their major risk. And also, at least at the moment of recording this video, I personally do not see any major American corporations facing bankruptcy in the near future, so yes, personally, I don't think any of this might happen in the near future as well. And risk number 5 is the bubble in the technological sector, or specifically in the AI, artificial intelligence industry. Approximately 9% of respondents see there as the sign of concern, leaving approximately 3% of respondents naming other risk factors for their further investing policies. And personally, I do agree that this is one of the lowest signs of concern, at least at this moment, because yes, the AI industry, it feels like it is kind of showing signs of bubble, but it is not even close to be what we saw during the dot-com bubble in 2000s. So yeah, some particular companies, and even including Nvidia, the trillion-dollar corporations, they might be extremely overinflated, they might be overbought, but it is not as ridiculously overpriced as once again it used to be a couple of decades ago. At the same time, in contrast to dot-com bubble, these companies right now, at least big ones, they do support their unreal growth with the financial numbers they show. They show good growth, sometimes even in triple digits. They make very good projections for the next earnings reports, and still they're able to meet them. For these reasons, yes, even though the company's valuations are going extremely high, there is some proof for these valuations. Guys, I'm also very curious to hear what you think is your major risk for the near future for the US stock market, so please let us all know down below. And as always, if you did enjoy this video, please like it and subscribe to my channel. Thanks so much for watching, and see you tomorrow.